Okay, guys, Bitcoin has made a new low. We've come down, we've broken below the low we made in the last couple of weeks here during the FTX crash. We've come down a few hundred USD lower, made a new low on a couple of weeks. It wasn't really sustained price action. We came back up and now we're back above the previous low. So now the big question is, well, what's going to happen next? Obviously, that's always the big question in the market, but particularly now, because right now we're on the verge, as I said yesterday, we're on very thin ice. We're on the verge of breaking down. We closed the daily candle just below the previous low, but we haven't seemed to have that actual structured breakdown yet. And it's pretty clear as to why we haven't seen it yet. I'm going to get into that in this video. I'm also going to get into the 3-day chart, the weekly chart, and the shorter term price action, because I have a suspicion that Bitcoin right now is pretty oversold. Okay. However, we are on a deadline. So there's a big question as to whether the oversoldness of the market kind of leads to a bounce before that deadline comes to an end. Because we're also on the verge of a breakdown. We're also on very thin ice at the same time as being oversold. So it's a little bit complex right now. There's quite a bit to discuss. We're going to get into in this video, of course. Also, we need to talk about the S&P 500 and traditional markets and whether or not the traditional markets are going to drag Bitcoin down into 2023, which is a big suspicion that a lot of people have. Let's get into it, guys. We'll start out with what actually has happened in the last, well, let's say 24 hours, right? We've come down, as I just explained in the introduction there. The previous low was at 15.6K, was this pink line. We came down. We were below that point for about 3 hours in total. Okay, so it wasn't an actual breakdown. It was more of a fake out below that level. We did manage to bounce off of a support in a vague kind of way. We did bounce off of it. We also formed a orange, as you can see in the orange here, descending channel formation, which of course is a bullish formation. It means we're probably going to see a break to the upside if that is given enough time to play out. But there is a problem with that. We'll get into that in a second. We're seeing descending volume in the downwards trend as well while we formed a descending channel formation, which again is bullish. It means that although the price is moving downwards, the further the price goes downwards, the less and less people are willing to sell, which means the fair value of Bitcoin as of right now in the market is a little bit higher than where we are right now. So again, that's indicative of an oversold asset. We also have, for example, the RSI on the hourly chart showing clear bullish divergence, again, is an example of an oversold asset. And then on the daily chart, we have stochastic RSI bottomed out and trending upwards, which is an example of an oversold asset. And the RSI on the daily chart as well, seeing a clear bullish divergence. Again, an example of an oversold asset. So Bitcoin is clearly oversold. Okay, there's many indicators right now through volume, through RSI, through even if we looked at MACD, even if we brought up Bollinger Bands, we can see everything is kind of saying, okay, Bitcoin's oversold. We haven't really lost the support yet. We tried to lose it. There wasn't enough selling momentum to push us downwards, right? So that's what's happening with Bitcoin right now. We're kind of, there's not enough selling pressure at this point in time to push downwards. We tried it, right? And this is kind of articulating what happens in charts into words. We tried to go downwards, but there simply wasn't enough selling pressure. So we kind of just said, okay, we're going to bounce, right? We bounced off support. That's what happened. And so where is that support? What is that support? Where is it stemming from? All we need to do to understand that is zoom back here on the daily chart, right? It's the pink line. Zoom back. Where is this support coming from? It's coming straight from before the bull market or during the start of the bull market in November 2020, right? We rejected off that level. Once we got above it, we flipped it and it was a bounce zone. So that's the support level. And even zooming back further to something like 2018, which isn't actually on the Binance chart, we can bring it up on the, let's see if I have a chart here. Yeah, zooming back even further to 2018, it also is a level that we tested after breaking to the upside, came back down, knocked out on that level. That's roughly the same region that we're at right now. Not quite, but roughly the same region. So yeah, that's the support level, so it's relatively strong. And I have said for a few videos now, I do think there is a decent argument to be made that we could be holding that at least for the time being. But at this point in time, none of that is relevant, right? Predictions aren't relevant. I also said, we're more likely to drop below it. But the point is, predictions aren't relevant right now. What is relevant is what's going to happen, right? Because that's something I want people to understand. This is not a trade zone. So it doesn't matter what people think. It's not a trade zone, right? We're in the middle of a market pattern on support that if we break, we'll probably see a massive correction very, very quickly. Not a trade zone right now, guys, right? So it doesn't matter what people think. Why is it not a trade zone? Well, all we need to do is look at the weekly chart and the 3-day chart. First of all, weekly chart has a massive RSI descending line. When we break that, that's going to be a trade zone. But we're also seeing bullish divergence in the weekly chart, which kind of is indicative of the fact that the bottom could be relatively soon. It doesn't have to be right here, but it could be relatively soon. On top of this, as you can see, that weekly chart support, which is stemming from that 2017 retest, 2018 retest, is in the process of being lost. If we do close below 16.2k on the weekly chart, we will lose that level, and we'll have basically no support on the weekly chart until 13.8k, which we've discussed before as a potential bottom zone. On the 3-day chart, the same story, right? The same story. 1 day and 21 hours until the 3-day candle close. And as you guys know, on the 3-day candle chart, on the 3-day chart that I've discussed many, many times, okay, if we do close the 3-day candle below 15.6k, we will be seeing a breakdown on the 3-day RSI. All right, this yellow RSI level at 33.62 on the 3-day RSI. Every time we have broken below that level, we have seen a correction of a minimum of 20%, right, and a maximum of 60%. Every time we have bounced off of that level, we have seen a large bounce. Okay, so if we break this level based on 1, 2, 3, 4, 5, 6, 7 occasions, right? If we break this level based on 7 data points, we'll be seeing a minimum 20% correction, right? Which would take us to a minimum of like 13k, which kind of lines up as said by the weekly chart at 13.8k. Now, so we don't want to lose that, right? And this is what I said before. My predictions aren't relevant, doesn't matter. Who cares? It's a no trade zone, right? So why do we care about predictions? We've got 1 day and 21 hours until we know what's going to happen. Predictions, who cares? It's a prediction. Cool, chuck it out the window. It doesn't mean anything, right? We wait 1 day and 21 hours and we will see whether or not Bitcoin's going to break down in the 3-day RSI. If it does, based on 7 data points, we'll be seeing a 20% correction at the minimum, right? That's what matters. Me saying, oh, I think this is likely, I think this is, it doesn't mean anything right now, right? And that's the difference, I think, between experienced analysts and unexperienced analysts. People need to understand that there are periods in time in the market where you need to step back and just wait, right? That's very important. So I can sit here all day and say Bitcoin's oversold, because it is. It's oversold in the short term. Bitcoin is oversold on the short term. There is much evidence to suggest that Bitcoin is oversold in the short term and should bounce. But the point is, right, we've got 1 day and 21 hours until we see whether or not we're actually going to see a confirmed breakdown or not. So who cares what's happening in the short term? Let's wait 1 day and 21 hours, right? That's kind of my opinion on it, you know. And some people would like to do different things. They'd like to trade right now, perhaps take a long position, and then if we do see the candle close, they'd just exit the trade the small loss. That's fine. People could do that as well. And there's nothing wrong with doing that. And in fact, I'll probably do that. But for the sake of a YouTube channel where I'm trying to keep things simple, I'm trying to give you guys what is the most important thing right now. The most important thing right now isn't the hourly chart. I can tell you that much, right? So yeah, that's very important. So 1 day and 21 hours until that 3-day candle close, that's going to tell us so much about Bitcoin. So much about Bitcoin. I'm very excited to see what happens there. And of course, we need to look at the traditional markets a little bit. This is just a segue into a completely different topic. I want to briefly interrupt this video to talk about the BitGet exchange. Now, the BitGet exchange has 5 times lower fees than Binance, which is commonly referred to as the cheapest exchange in the cryptocurrency market. It's also non-KYC or voluntarily KYC, so you can stay true to the fundamental values of cryptocurrency, one of which being anonymity, of course. It's also got a security fund in there, so if you lose your funds by fault of the exchange or by personal fault, you can make a claim and actually retrieve your funds back. On top of all of this, if you sign up using my referral link, you can get access to exclusive discounts and rewards. This is the best exchange on the cryptocurrency market, and I use it personally, and so should everyone at the Wolves of Crypto YouTube channel. Now, if you're interested in actually learning how to trade for yourself, you can check out the Crypto Academy via the website link in the description below. This is a course developed by myself and Mega Crypto, a 10-unit course taking you through every single step from step 1 to step infinite about how to become a trader. Go ahead and check that out and chuck us an email at cryptoacademycourses@gmail.com, and we'll get back to you with the full information and payment information if you're interested. Thanks, guys, for watching the advertisements. Let's get back into the video here. But I do want to look at it because a lot of people tell me, as you guys know, I base a lot of my predictions on the 4-year cycle theory. I've been bearish on the market since 66K in November 2021, one of the first people in the entire market to become bearish, and I openly admitted it was a bear market at 58K. Now, there's a difference between being bearish and admitting it's a bear market. To admit it's a bear market, you need to have full confirmation, hence why I didn't do it at 66K, but I was telling people to sell their coins at 66K. The point is, how did I get to that kind of prediction? How did I make that assumption? Well, I made that assumption based on the 4-year cycle theory, right? I've talked about this on the channel extensively, many times, and this is the 4-year cycle theory. Let me bring it up 1 second. You guys know what it is by now. Most people probably have heard of it, even if you haven't watched my channel before. It's a date range trend on Bitcoin, and essentially it stems from the halving, and it points to a Q4 bottom, right? A bottom in this year in Q4, give or take, basically a month, right? So it could be in January, but most likely Q4, okay? That's what the 4-year cycle is, and that's how I used to predict the top. But a lot of people would counter that, and they'd say, well, Wolf, you believe in the 4-year cycle theory. What do you have to say about the fact that this is a recession? This is the first time Bitcoin's been in a recession or tossed up with a recession. What do you have to say about the fact that the S&P 500 will probably go, and traditional markets as a whole, will probably go down a lot further into 2023? Well, I'll say I completely agree with you. And then I'll give you my reasons why I don't think Bitcoin will. Okay, I agree. I don't think the S&P 500 has bottomed out yet. I've made myself very clear on this point for a long period of time. Okay, S&P 500, just first and foremost, just straight off the bat, we've seen an upwards trend. We've seen a bounce off the 200-week SMA, which is a very strong support zone for the S&P 500. Great, we've seen a bounce, awesome. We've bounced straight into resistance. We haven't broken above the yellow line yet, and we've seen descending volume this entire bounce, which is bearish. Okay, on top of this, and this is the main point that I want to look at, throughout the entire price history of the S&P 500, right? This is 1, 2, 3, 4, 5, 6 occasions. Throughout the entire price history of the S&P 500 since 1980. So I guess not the entire price history, but since 1980. In fact, we can add one more data point here from 1974. There you go, since 1974. So 7 data points. We have not once ever bottomed out on the S&P 500 until interest rates have started decreasing. Okay? Interest rates are still rising. Okay, they're still going to go up 50 basis points in December, probably 25 basis points in January, and then they might stop the hikes there. But then the point is they probably won't start decreasing until the middle of next year, maybe a little bit earlier. Right? The point is, every single occasion since 1970, 50 years, we have seen the S&P 500 go down. We have not seen it bottom out until interest rates have started decreasing and had already decreased significantly. Okay, and they're still rising right now. So for me to sit here and say, oh, the S&P 500 has bottomed out, we're going to go up. It's simply not consistent with the data. Could it go up? Yes, of course it could, but it would be a complete, disobedience to the current trend that's been lasting 50 years and 7 separate data points. So I would say the S&P 500 has to go down further. But the reason why I don't think Bitcoin has to go down further, and the reason why I think Bitcoin will bottom out while the S&P 500 is going down, is because Bitcoin and the S&P 500 are not perfectly connected, guys. This is something we've looked into many times in the past, okay? Just look at this. Bitcoin topped out in November. The S&P 500 topped out in January. By the time the S&P 500 topped out in January, Bitcoin was already down 50%, okay? It can do the same thing to the downside. Bitcoin can bottom out months before the S&P and be up 50% by the time the S&P bottomed out. We literally saw it happen last year, right? It's not like a completely wild thing to suggest. We literally saw it happen last year when there was even more institutional investors in the market, which is when the S&P should have been the tightest correlated to Bitcoin, right? And 1 second, sorry. Looking at here, even recently, right, even in recent price action, Bitcoin bottomed out in June. It went sideways until November, right? During this entire period of time, the S&P 500 was still dropping. The S&P 500 found a bottom in June, but it went down like another 10% until October, and then it started going up in November while Bitcoin went down. It's like, to act like these two charts, to act like Bitcoin and traditional markets are perfectly correlated is ignorant. It's completely ignorant. It's simply not true. I don't know how else to say it. It's simply not true. They're not perfectly correlated. They are vaguely correlated. They are vaguely connected, right? I say that word wrong. I'm sorry. I can pronounce it wrong. Correlated. They are vaguely connected charts. And the only reason they're vaguely connected is because everyone has dollars, and whatever happens with the dollar, basically people react in a certain way. If people get scared, people sell assets generally, and that's why. They're not actually connected for any true reason other than that, other than the fact that the same people who hold the S&P 500 hold Bitcoin, and they're all affected by the economy generally. That's why. So they're vaguely connected at best. So let's not act like Bitcoin can't bottom out before the S&P. It's simply not true. I believe that to be complete ignorance. I'm sorry, some people disagree with me on that. That's my personal opinion on it. So yes, I do think Bitcoin can bottom out before the S&P. I think it will bottom out before the S&P, and I don't necessarily think the S&P 500's bottom is in. I'll be shocked if it is, because that would break a trend, and that trend is quite strong. Again, it's possible, but I don't think so. So that's my opinion on Bitcoin. Basically, we need to be waiting 1 day and 21 hours. By the time this video gets out, it'll be like 1 day and 20 hours probably. And again, even on the weekly chart, 5 days and 21 hours until the important weekly candle close that we looked at before as well. So the next 2 days should be very interesting. Bitcoin is currently oversold on the short term. For people who are interested in trading short term, it's very clearly oversold in the short term. It will be interesting to see whether the price follows what's going on with TA here. Thanks for watching, guys. Hope you enjoyed the video, and I'll catch you in the next one. Cheers. You guys should also go ahead and check out the Telegram community, which you can join for free in the pinned comment, and also the VIP group, which you can check the results for last month and also find the information for in the pinned comment as well. Thanks, guys.